Good afternoon, everybody. Welcome to the TraderMerlin Show for your Thursday afternoon edition. Hope you had a great day in our markets. Some fun stuff out there. I thought maybe I'd have a little bit of fun with the media. As we know, the media is the master manipulator out there, and bottom line is we need to pay attention to the data that's relevant for us and helps us make our trading and investing decisions. What's up with the Fed now? Maybe I'll talk more about that. I'll talk at length about that one tomorrow. But yeah, Fed now is being rolled out, and get ready for the central bank digital currency. It's coming very soon. So here's the graphic I made for today. I said, give me a picture of Uncle Sam celebrating, and I actually think this is a great picture. Although the irony is, if you look at his left hand, it looks like one of his fingers got blown off in the fireworks. And that may be a nice analogy for what's going on in our current markets. I'm kind of surprised at what happened today. All the headlines were just raving about the great data and how the bad stuff's behind us. Our troubles are over. It's nothing but up from here. Bull, bye, 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 bye. And I was like, oh, man. While the data looks great, it doesn't mean that all of a sudden everything is miraculously fixed. Remember, there is that lag time for these rates to impact all of the data. So I thought, let's do a show about that and talk about the data, and maybe our troubles are over, maybe they're not. Let's all just formulate our own opinions about that. So let me start with the actual GDP number. So as usual, we'll bring you out something like Forex Factory, which here you go. There is your GDP numbers. You can see the expectations were that our final GDP, which by the way has been revised up and up and up, right? The last couple of quarters have been revised, or sorry, not quarters. There's the advanced, there's the preliminary, and there's the final. They've been revising those up and up and up. So they've been popping slowly to the upside. Okay, fine. 1.3 is what they had previous. They expected 1.4. And again, these are annualized rates. The final came out was 2%, which was like really kind of surprising to see that big of a pop. And I have a graphic for you to show you close up what that looks like. Here is your final GDP number after they make their different revisions and they finally lock it in and say, okay, here we are. We'll put 2% on the books because previously they had 1.2, 1.3, and they keep modifying it. Now we'll lock it in at 2. So in looking at this, I want you just to kind of have fun with the previous graphic I just showed you, which is, our troubles are over. We've really only had 3 consecutive quarters of GDP that have been above that zero line, right? We had those 2 quarters there that were contracting down below zero, which of course is what gave us the fear of, oh, we're in a recession. It's bad times ahead. Well, now we've had 3 quarters above it. And while that's great, it doesn't mean that all of a sudden it's rosy skies, peach cobbler, and joy from here on out. I put a little horizontal line. And what I'd like you guys to do for yourselves just before I do this is I like to look at the historical data. And this goes back 23 years. This goes back into late 1999 when Prince was still jamming and singing about the future. It's actually, I think it's the very first quarter of year 2000. But either way, you got 23 years worth of data here. And I like to just arbitrarily with my eyes kind of eyeball what I think would be an average of GDP. Now, I'll put the line on right here, and there's your red line. So the red line really goes into Q3 of last year. It peaks right at that 3.1%. So 3.13% is your historical GDP going back to 1948. If we average the GDP for the United States economy from 1948 to 2023, you come up with 3.13. So we're at 2%. And the media is raving, saying bad times are over, good times ahead, this is it. We've cleared that hurdle and it's off to the races. Well, if you believe that, then you are just a patsy to the media. Look at what's happened the previous 3 quarters. While we had a big surge up in Q3 of 2022, Q4 was down slightly from that, and then Q1 of this year is down slightly. So while the number is decent, it's 2%, it's still well below the 3.13% average. Now, let me ask you this one. If our GDP, let's just assume that it was at 0, right? We had no GDP, no economic growth, and you pump in to the economy, whether that's through stimulus, infrastructure initiatives, buying of different government bonds to prop up the bond market and push yields down. If you put in roughly $17 trillion in a 2-year period of time, What you should have seen is GDP surging and staying above 6, 7, 8, 9, 10% for a period of time. So I'm a little concerned that we put that much money in the economy. We literally just took a dead body and just took gallons of adrenaline or morphine and pumped it in there to get that thing back to life. Well, to me, we've got a walking zombie at this point, and I think that that's what this picture kind of represents. I don't believe that the good times are just right in front of us. I still think we've got a little bit of tumultuous times as we get through this wave of interest rate hiking. Now, this is, I saw a comment here earlier saying, hey, is this the weekend run-up, right? Daryl was saying, this is the holiday weekend run-up. Well, could it be? Right? I think there might be some truth to that you pump things up going into the holiday weekend. We go launch fireworks and be destructive and celebrate America in a very positive, happy way. No one wants to go into a holiday weekend having, a Black Friday type of approach. The other piece of the data here, so let's just take that GDP for what it's worth. Granted, I'm happy GDP is 2%. I think that is probably pretty good, but I wanted to break it down a little bit more and see where that comes from. Right? What spots are generating that sort of number of 2%? So here is what we saw influencing these markets. Now, it's weird the way they do it, but it looks like you have the overall GDP number there, and I'm guessing that's kind of a red. I'm colorblind, so sorry. You have private goods in blue, private services in kind of an orange, and then you have government spending in blue. Notice, Joe fixed everything. That was Uncle Sam, by the way. Uncle Sam, not Joe, Uncle Sam. Look at the blue bar right here. I think I can actually write on this with my cursor. Sorry, I might advance the slides. But if you look at this blue one right here, and right here, that's the past 3 quarters of government spending. So clearly the economy might be doing okay, but if you wonder, what's really pushing this thing, it's private services, which is going to be a lot of your technology companies, and government spending. So I really don't see a broad-based surge, a broad-based help here. It's really government spending as a piece that's fueling this. And it's kind of ironic because they are boasting themselves. Things look so great. Our markets look fantastic right now. It's getting better. And if you notice what happened with the Fed funds futures today, we saw a nice surge up in the probability of the Fed funds being raised at the June 26th meeting. So let me bring that one up for you guys just so you can see that, because I thought that was an interesting transition. So yesterday, I think we were about 75 or 76%. Let me real quickly show you. It says yesterday we were at 81. I thought we were at 74 yesterday, but all right. We were 74 last week, and now we're at 86%. And the more data that keeps coming in like this, the more likely it means the Fed is going to raise again. I still am in the school of thinking that they're going to pause. I think it's the smart thing to do, just to wait and see. But if we continue to get a little bit of good data, the Fed does have much more liberty to raise rates another 25 basis points. Now, really, in my opinion, GDP was already kind of known. The surprise today was not known, and I think that might have been orchestrated, a government piece. The number that matters, at least in my opinion, a little bit more is what comes out tomorrow, and I'll leave that at, I'll just tell you, it's the core PCE price index number. That is the actual inflation data, and that will be critical. If we get a real big jump up in PCE, then that Fed funds futures probability is going to decline sharply, and our market's going to take a dive tomorrow. If it comes out much lower than expected, and we see a contraction even more so on core PCE, then that will further bolster the argument of Uncle Sam that the best behind us, or the worst is behind us, and markets are going to look good going forward. Everyone celebrates my wedding anniversary on the 4th of July. Did you really get married on the 4th of July, or is that just when there were a lot of fireworks going on, Lori? Hey, Pepe. All right, so that was your first part of kind of that I found interesting. And then I always like to look at data with, raise my eyebrows suspiciously and try to figure out exactly what's moving what. Why do we see such a positive GDP number? Government spending's been driving this for the past half a year, right? Or past half the year. Now, the last part here is something really interesting. This is kind of how it breaks by industry group. So healthcare and social assistance, that's your government spending. That's number one on that list, right? They call it private services, but there's healthcare pieces from the government in that pie chart as well. Retail trade was number 2 on that list as far as gains. And again, they're calling that the private services industry. What I found interesting was the third one down. Agricultural, forestry, fishing, and hunting actually contributed more to GDP than real estate and rental and leasing. However, that was increasing as well. So there are a lot of people that are skeptical on that real estate number, like myself, because remember, higher rentals is going to contribute to a greater GDP number. But you don't necessarily want to have higher rental prices because that starts to constrict the economy. So while some of this is good, there's other components of it that, while it shows an increase, is actually bad for the markets. Like, in my opinion, the rentals. Rental prices going up are not a good thing to help a thriving economy. You need affordable housing. Government spending, the term military-industrial complex makes so much more sense now. Well, it's just, I'd love to get John O'Donnell's take on this, because he would look at it and just get upset that the government is spending so much, right? Well, we enjoy a lot of what the benefits of that government spending, that's for sure. All right, let me get back to this, and I want to run through here so you can see which ones were dragging GDP down. Where do we see the contraction in that Q1 GDP? Finances and insurance was negative. Durable goods manufacturing was negative. Non-durable goods manufacturing. So really, manufacturing is a part of this that's dragging down our GDP numbers. And we actually have seen an about face, a nice little bit of a move up in manufacturing in the Empire State and Richmond. Those numbers have been started to move back into positive territory, which is great. Wholesale trade was pulling us back. Utilities, management of companies and enterprises, not quite sure what that represents. And then it says other services except government. Oh, everything. And education contributes nothing to GDP. I love that. Educational services. Let's not get any smarter, but let's just get more social assistance and help those that don't want to educate themselves or have problems and need help from the government. Anyway, thought this might be a little bit of interesting breakdown for you, at least with regards to GDP. Again, I don't really trust all of it. I don't trust all of the data that's being released, but all in all, looked like a pretty decent piece of news that came out today with regards to your GDP. But wait, there's more. Let's focus on today again. The other piece here was your unemployment claims. Now, I personally don't put too much weight on it because it fluctuates so wildly. We were expected to actually have a decline in our unemployment claims. You can see that right here. I'll highlight it in blue or gray, now gold, whatever. They're expected to go from 265 to 264. We're giving it at 239, and that does line up with the unemployment numbers we've been seeing, which have been historically low, right? 239,000 is not that much with regards to unemployment claims. Here is your chart of what unemployment claims have looked like historically. And unfortunately, it doesn't let me go back decades, but I can go back a few years. Here goes back to 2019. And you can see that it seems like if you go back to 2019, we were right around 200,000 a day. Well, we're at 239. So almost back to what we had pre-COVID with regards to the unemployment claim. So all in all, that's a pretty good number as well. Now, the last one, which I have not been putting much emphasis on personally, was where'd it go? It was the housing data. There we go, pending home sales. So pending home sales showed a negative 2.7% slide, although historically when I look at it, most of the data has been below zero anyway. So I feel like that's almost the norm, is to have declines in pending home sales. I know it seems weird, but really the majority of these blue lines seem to be below, especially since 2014, 13, seem to be much lower than that zero line. So I really just kind of discounted the pending home sales. That new home construction was the one that I was really focusing on yesterday. So that said, Uncle Sam saving the day. You've got government spending bailing us out. I think we can make that decision, not a decision, but we can start to get a clear idea what the Fed's going to do for tomorrow's session when we get that core PCE price index, which comes out early in the morning. And I'll talk about that when we wrap up here for today. Let's see. Philadelphia has an insane amount of new apartment buildings. Also heard Philadelphia is one of the few cities that's cheaper to buy a home versus rent. Well, might be. And everybody's building right now. I mean, it's crazy. Even around here, I go to the district every now and again, and it seemed like 3 months ago there was just a big open field. And now it's out of nowhere. Literally in just a few months, they built these three or four story buildings that are just hundreds and hundreds of new units. So supply, people complain about supply being the issue. It seems to me like supply may not be the issue here going forward. I think, again, what the issue might be is corporations buying all of these homes and real estate, knowing that they'll get long-term appreciation, and then pricing people out of different markets because they refuse to lower their rents, etc. So we'll see as it goes forward. So I'm in the camp of our troubles are not over. Going in conflict with my graphic here. I think that we're going to have choppiness. I think we're seeing some very good data economically, and that's great for our markets going forward, but we're not out of the woods yet. So don't get too excited. Don't get caught up in that euphoria. You know, watching that Fed funds futures number change so dramatically today, I was like, oh man, people are really hanging their hat on that GDP number. I think the core PCE will have more of an impact than the GDP number, and that comes out tomorrow, which I will show you guys here when we wrap up our show today. So let me go to, and if you have any questions, I will go through a couple that came through here. Let's see, Tipton, new name to me, so thank you, Tipton. It must be all the new senator for Penn, Fetterman. I'm not sure. Can you comment on space today? Was expecting a big rally. Well, I mean, I think today when you look at space, SPCE, which I will bring up here for you, you know, to me, it's an example of buy the rumor, sell the news. So even on this program, if you follow this program or tune in, you'll see there's been several people here asking about that over the past couple of weeks, knowing that their maiden voyage flight for commercial was today. And all went successfully. Everything went fine, looked kind of cool. And I saw a lot of memes saying that the project itself, this flight into space, is nothing more than that submarine that went to visit the Titanic, just it's above the water. So it's inherently so much safer. I just had to laugh at that one. There's still certainly a lot of risks with that. Anyway, here is SPCE today, which was down 10%. It's down another 1.4 in after hours trading at $4.17. You know, this is buy the rumor, sell the news. Right now, the passenger wait list, I don't know if there is, I'm sure there is a wait list, but they're charging $450,000 at a base to sit on an airplane, just go up for a couple hours and get maybe a little bit of weightlessness and then fall back to earth. Now, there might be some uber wealthy people who will take on that risk, just like they did in that submarine. There might be a lot of people out there that want to do that. There's also people like myself that even if I was uber wealthy, and now let's say I had $100 billion to my name, right? I'm far wealthier than Elon Musk. You're not going to get me in a submarine to go under to 12,000 feet of water to watch an old dead boat that's got just no real appeal to me. And I'm not going to fly into space yet until this is totally proven. I don't really care to go up on space just to fly around. It's like an airplane that's much higher than everyone else. Now, maybe a trip to the moon, as long as I had a lot of Valium or something to knock out my anxiety, I might go to the moon and have a destination, but I can't see myself taking on that kind of risk. I don't know where you guys stand on it. How many of you, if you had, let's just say we all have the money, you have $450,000 right now. Let me make a poll. Why not? I like polls. Polls are fun. It's going to take me a second to type this in. And assuming you had the money, would you go up in space? And I'm saying space meaning the Virgin Atlantic or Virgin spacecraft. You're not going into orbit with, you know, the space station. You're not going to the moon. You're not going to Saturn, Mars, any of that. You're just literally going off the ground, going to hover for a little bit, get some weightlessness, and that's going to cost you $400,000. Would you do that? How many of you would do? I'm curious. I can't vote, but I will put mine as a definitive no. Even if it was like 10 grand, I would still say no. I'd rather buy a used car for 10 grand. Honeymoon in space? Yeah, no, not for me. Like I said, I'd like to have a destination. Like maybe if I said go to the moon, and then if we have the, I would love to one day. It won't happen in my lifetime, but it'd be great to fly to the moon. They'll probably have some big glass bubble we can sit on the side that you can see, and just sit there in a lawn chair, have a cocktail, and just wave at Earth from the moon. I think that would be kind of cool. Maybe I might do that. Saba says absolutely not. That could be better spent spending the entire summer in European traveling the world. Sava, if it takes you $450,000 to just travel the world in Europe for the summer, you are a lavish spender, my friend. I could travel the rest of my life on the road traveling for $450,000. And I wouldn't be living lavishly, but I would certainly have good experiences along the way. But yeah, $450,000 goes a long way. I would much rather do. After the submersible incident, hell no. Yeah, heck no. I'm with you. I just don't. I don't know. It's cool. I love space, right? I love the fact that William Shatner got launched up into space with Bezos. And keep in mind, this is Virgin Galactic. You also have SpaceX. You also have Blue Horizon. Or Blue Origin. Excuse me. I think it's Blue Origin. That's Jeff Bezos' company. We may get in a few years a lot of competition in this space, right? A lot of competitors saying, "Hey, we'll do space travel." And Once it gets to a very safe rating, then I might consider it, but I just don't really see the need for it. There's an elevator to space. Would rather do that. Yeah, I don't know, man. Gmo, that'd be kind of nervous being stuck in an elevator that long. You hope you're with the right people. If the takeoff was like an airplane takeoff, yes, but that crazy take. Oh, you mean straight up? Yeah, that little. I don't know. Either way, I think I'd have to be so sedated. Like I'd have to be on some sort of anti-anxiety medication because I'd probably lose it. I'd pay to go to the space station. No way. That's like that submersible, buddy. I saw the video footage of those guys. It's like literally just a bigger submersible where they can barely move around in that thing. I'm way too nervous. All right, I'm going to finish the poll here. Wow, 21% of you said that you would go up into space if you had that money. Well, I guess then that proves the point right there that's why these companies do it, right? There's always someone who's going to pay it. $450,000 seems like a lot, but like everything that's brand new will probably get a significant pullback in the cost of going to space once they optimize it and more competitors come into that space. All right. So regarding why the big, you're expecting a big rally, again, buy the rumor, sell the news. You have the big rally over here. Now all of a sudden it's correcting. Does this mean that we're going to start to see a bigger base put in and now it starts to make some highs? Possibly. I think great. It might be long-term okay to buy some, Virgin Galactic. But again, I think it's very, very skeptical at this point. It's speculative. You don't have a lot of earnings coming. As a matter of fact, they're losing money, right? Their previous earnings they lost 55 cents per share. The last one was 57. So their losses are growing. They're losing more and more money each quarter. Will it make it? Does it have enough money to warrant staying alive, or does it ultimately scuttle its businesses and move on and say, not going to work? The space capsule is fully tested for the environment it will be in. The submersible is not correct. Yeah, that is 100% true, that one. And that's going to raise a lot of questions, Les, is who's the regulatory agency that's now going to govern submersibles, right? Should there be some specific testing guidelines they have to meet, parameters they have to meet? Is there an authority that says, hey, this is safe for space? Yeah. Is it safe for the ocean? We put that on the Coast Guard? You're going to put that on. So there you go. So your big rally, Tipton, I didn't expect it to happen. Just like when the Apple makes their release of the new phones, the run-up is usually into the phone announcement, and then when the phone is released, it drifts off quite a bit. Typical. Okay, that was all the questions I had for today. Unless you guys have some new ones, I will run through our markets here real quick. Let's run through from top to bottom. Nothing out there that I made today. No trades made on my part today. I will show you from bottom to top. Gold. And by the way, there is some more interesting pieces data-wise, which I'll cover here in just a second, especially when you look at that 10-year bond. Gold, down 0.22%. So I believe it was Pepe yesterday saying, I don't like that it hovered right above the beginning of this demand zone. Therefore, I don't put enough emphasis on it. And I agreed with you. We had a hammer formation yesterday, right? We had a hammer formation on gold, and it said if it runs above 1927, then there's your buying opportunity. It did not, right? It did not rally above it at any point. So we can do that same thing for today's candle. If you look at today's candle, the high of that was 1921. So if we start to see a rally start up and get above 1921, I think you could have some legs for gold. And granted, we are deeper in that demand zone. So I've got this demand zone that goes from, but looks like 1919 to 1890. So you got about a 30-point demand zone there, and we tiptoed to pretty low in it today. Our low today was 1900, so we're 10 points off the bottom of that demand zone. Not too bad. Let's see if we get follow through on gold for tomorrow. I'm kind of anticipating a little bit of a bounce there as well. NASDAQ 100 was down 0.2% today. Not a lot of exciting action there. It actually gapped up, but then you just saw the little red candle. Nothing, no big range. It was a smaller range than it was yesterday, but NASDAQ down 0.2%. Here's your 10-year. So right now it's showing a 10-year is unchanged. It's because we're rolled into the new session. But you see a giant green candle here. That was a pretty bullish sign for the 10-year. Now, remember, if they're going to be raising rates, that means most likely that 10-year is going to start to rise as well. And that is going to put pressure on these overall markets. It was interesting to see such a big spike today. I think it was over 3.7%? Let me get you the exact number here on what our gain was for the 10-year today. 3.56% at the end of the day is what it gained. And if that does continue, that'll start to put pressure on the markets going forward. So be careful there. Dollar index, 0.37%, continuing its nice little rally. Again, bigger picture is consolidation. I needed to break this upper level that we achieved on May 31st, which is right around 104.60. It gets above there, then it's 106, and then we'll start to map out some overhead supply zones if we, in fact, get there. S&P 500, 0.41% gain, right back up to that overhead supply level that it bounced off of just a couple of weeks ago. Again, I was expecting more of a continued sell-off here. We never got it. We've had 3 up days in a row, so we can get rid of that pullback perspective. It still is an area of interest to me, this 4,300 mark, but right now doesn't look like it's going to happen. It's funny. Do you guys I see little emojis popping up on my screen as well. Are you guys hitting is there like a party button or a like button? I saw a bunch of stuff fly through. Hearts were flying through my screen earlier. I was like, where's that all coming from? You guys, it's all from you. All right. Continue on up here. Podium time. We've got third place, crude oil, 0.43%. Really nothing important, right? Yes, it was up 2 days in a row, but it hasn't broken out of this kind of big choppy sideways action we've had here. So who cares? Not that big of a deal. Russell 2000 was your big gainer from the index perspectives. Nice move to the upside, ripping. Hopefully we get back to that 1930 mark. If we get above that, then we'll start mapping out overhead supply zones from there, and maybe it does challenge the top of the bar box, which goes all the way back to July of last year, putting us up around 2035. But we're a long ways away from that right now. All right, and finally, you had Bitcoin. Bitcoin moving up nicely, back above 31,000. Right, we tiptoed below 30 yesterday. Freaked a bunch of people out, and then all of a sudden rip right back up. Given the way that this thing is holding and the strength that it looks like it has right now, it does feel like it's going to want to keep moving up. And again, you had Fidelity apply for their spot ETF. You had BlackRock, and now you have ARK. Kathy Wood of ARK has now revised her petition to fit the wording that it looks like it's going to get approval from the SEC. So there may be multiple companies that get approval for a Bitcoin ETF. And again, I believe that's going to be a big, big catalyst for Bitcoin going forward. We'll see how that pans out. But I think part of the excitement today was Kathy Wood's announcement that she's modifying her application for the SEC for the Bitcoin ETF. Let me see. What do we got here? We need someone who's not going to be a collapse bridge on infrastructure or trek the economy. You throw a whole bunch of weird words that throw me off there, Tom. Or break fast on foreign policy, no malarkey. Oh, boy. I'll leave the politics stuff out there. Stall before the move up in Bitcoin. Yeah, I think so, Margaret. If we look at the formation, what's called a bullish flag, which we've talked about many times, here's what a bullish flag would look like. It looks something like this. You have a big impulse move, and I'll take it all the way up to there because that was continued green. And then what you have is you typically have a pullback. And if I kind of go along across these lows here, I'll even use the tails, you haven't seen much of a pullback. Right, it's actually been showing more strength and more strength and more strength. So I think this is a very positive sign for it that it's sitting at overhead supply and not selling off. Right, it did for a day, but it rallied back up. And while it struggled to break above that 31,000 mark, the fact that it's staying there and not having a significant pullback in light of all the negative stuff in the crypto world, I think that's a very positive sign for it going forward. You do have some levels that you could argue this peak from back on May 27th of last year. All right, that peak was that peak was 32,450. Right, that's the last real obstacle until we get up to like 40,000, which is why I put 45,000 as my target for Bitcoin. Which countries are crypto friendly? You know what? Honestly, the list changes every single day. China wasn't friendly at all. Now all of a sudden, China, it looks like they're becoming more friendly. There's regulatory stuff in the EU right now saying on how banks and businesses can now potentially own Bitcoin on their balance sheet. So as far as being totally friendly and like, hey, it's legit here, El Salvador is the only one that I know of that's like overtly saying, bring it in, we're totally good. But you know what I'll do is I'll do some research and I'll make a list. Maybe I'll make a map of the world and kind of color code it by who is warming up to crypto, who's cooling off, and where the countries might be that might benefit from crypto. Let's see. That was that quote from a PA senator. Oh, okay. Man, I stopped while watching that. I enjoy watching the testimony because you see some of these senators, but boy, I just shake my head and wonder how on earth did some of these people ever get to make an office or get to office? Really just mind-boggling to me. There's so many really intelligent people in the world, yet somehow these people manage to get elected and drive our country going forward. Shocking. All right. So what do I have for tomorrow? Let me real quickly go to the economic calendar, and I'll show you that. Here's what we have for mañana. Your Friday session brings you, as I mentioned, the core PCE price index. Right, that's going to be the most important number of the week. GDP, okay, fine. It was okay. What I really am interested in is what happens with this core PCE price index. Last month you were at 0.4. So if you look here, you can see you had the actual numbers make it easier, right? You had 0.4 was your actual. They actually thought it was going to be 0.3. We came out slightly higher. Given what happened with CPI and with PPI, it's kind of making me feel like we're going to get a lower than expected number. So right now they expect 0.3. Given how much we contracted on CPI and PPI, it would not be unreasonable, in my opinion, to see this come out at 0.2%. If that does, then I think you'll get a nice rally tomorrow. You'll get these continuations on these major indexes. S&P probably get up towards the upper end of that supply zone. The NASDAQ will probably start to charge and get back towards those highs we achieved just a couple weeks ago. So could be a very bullish day, but it's all going to depend on that core PCE. Again, if it comes out at 0.2, I think we'll have a pretty good day. I think we'll be up over probably 1.5%, 2% if we get to 0.2 on the PCE. If it comes in line with expectation, then I think you'll probably just get a follow-through rally, maybe less than 1% move to the upside. If we get anything above 0.4 or 0.4 above, then I think you start to see the markets have a little bit of angst or fear or concern, and then we might see some negatives out there tomorrow. But of course, that is all speculation. Hypothesis doesn't mean anything. It's really what the market does tomorrow, what those prices do for you, and hopefully you will capitalize on some of that move tomorrow. All right. I think that's going to be it for me for today. I guess I am getting close to those 30-minute shows. This is a rarity for me. Tomorrow, I'm hoping I have some time to make some trades in the morning. I got a couple things I need to take care of, but I'll be recording some videos, and hopefully I'll make a couple trades. I've been light this week for me personally. I don't know how your weeks has been, but I will promote myself as often as I can, which is not very often. Again, I'm doing this presentation up in Las Vegas for the Money Show. We'll talk about building a crypto portfolio to prepare for the future. Might be somewhat exciting. All right, let's see. There are questions that came in. GS33, TraderMerlin, do you know if you have a Roth IRA, can you possibly sell calls against your positions? I don't know. I don't know. I think there are... I believe in IRAs, if it's self-directed, you can, I believe if it's self-directed, you can get option accounts, but I really don't know that one, unfortunately. Sorry. No problem, Pepe. Good to see you today, and safe travels, my friend. Safe travels out there. Just curious if you received, I did receive your emails, Ricardo. I haven't gotten to it. I'll try to get to them. I did get them. Yes. Did not get it. Let's see. Will you have a show Monday? No, I'm not going to do Monday or Tuesday. Or Monday, I'm probably going to be out barbecuing and drinking, and then 4th of July I will as well. So I'm going to take a 2-day break. Sorry, everybody, but got to do it. Got to have some fun. In Las Vegas, I will be presenting on, great question. I'm presenting on the 9th. I believe it's at either 11 a.m. or 1 p.m. So it's in that little window right there. So I told everybody, if you do go up there, let me know. You can email me at TraderMerlin@gmail.com, which is on the front. Maybe we'll go grab a drink or lunch afterwards or something like that. So there you go, John. I'll put the time on there. They had me as a tentative time. Hasn't been fully implemented yet. So, but yeah, I will be taking Monday and Tuesday off. I hope you guys do as well. Don't trade. Move away from the markets. Enjoy family for a couple of days. All right, that's going to do it for me, everybody. I'm going to, as Big Up says, with self-directed Roth IRAs, you can. Yeah, not 401ks. But even though they're some 401ks now will let you self-direct. So the Roth IRAs, you can. Let me talk to my financial advisor, buddy, just to confirm that one, just to make sure. And I'll get back to you on that. Okay, that's going to do it for me, everybody. Hope you enjoyed today's show. Go Space. I don't know if that's a long-term hold for anybody here. Uncle Sam, I don't believe, has saved the day. They've certainly propped up the markets to benefit all of us at this moment in time, and he looks awfully darn happy there. I hope you guys have a great day. I will see you tomorrow. It will definitely be a whiskey type of Friday. So take care, everybody, and I will see you all tomorrow.